Good morning, traders. It's Thursday, 8:01 a.m. Chicago time on the 12th of November, 2015. Derivatives trading involves substantial risk of loss and is not suitable for all investors. Past performance is not indicative of future results. I'm sure all of you can recite that by now before I even do. Um, on the overnight news, the news that's potentially carrying over into our session here in the U.S. Siemens reported Q4 net at 1 billion versus 1.3 billion, so it missed by quite a bit there. Industrial business profit 2.46 billion versus 2.31 billion expected. That's in euros. Announces a $3 billion share, 3 billion euro share buyback over the next 36 months. You can see that the market popped. We'll look in a minute and we'll see that the market popped up on the European Open and sold off immediately. The Siemens is a very large component of the DAX and the DAX is down. I think 75 points right now. People's Bank of China warned of financial risks as renminbi becomes an international currency. The Eurozone September industrial production came in at negative 0.3 versus negative 0.1, so much worse. ECB's chief Draghi came out and talked about QE. Says QE will run beyond September 2016 now, if needed, to achieve the 2% inflation target. The easing that the ECB has been putting out there is not having as much of an effect as they'd like. Initial jobless claims came out about a half hour ago, 276,000 versus 270,000, so slightly worse. Continuing claims, 2.17 million versus 2.16 million expected. For today, we're looking at the JOLTS job openings number at 9 o'clock Central, half hour after the open. That's 10 Eastern. Expecting 5.4 or 5,400, and I think that's in thousands, so 5.4 million. At 10 o'clock, 11 Eastern, we have crude oil inventories. We did not have crude oil inventories yesterday because of the Veterans Day holiday. U.S. crude oil inventories expected at plus 1.3 million. Distillate inventories expected at negative 1 million. Gasoline inventories at negative 1 million. And then at 1 o'clock Central, 2 Eastern, we get the U.S. monthly budget statement, negative 131 billion. As far as speakers, we have a ton of them today. 8:05 in about 1 minute, we get Fed Speaker Bullard on monetary policy. At 8:30 Central, we get Fed Speaker Yellen. At 8:45, just 15 minutes after the cash open, we get Fed Speaker Lacker. At 9:15, 10:15 Eastern, Fed Speaker Evans. At 11 o'clock, we get Bank of England Speaker Haldane. At 11:10, 12:10 Eastern, we get Fed Speaker Dudley. We have Cisco earnings after the close today at 56 cents, and then we have our final Fed speaker at 5 p.m. Central, 6 p.m. Eastern, Fed Speaker Fisher on FX transmission to output and inflation. So today is a parade for your entertainment, parade of Fed speakers. This is expected to drive what's happening here. Here's Bullard's comments coming out and pushing the market farther down. So let's switch gears here and have a look at what's in front of us. Yesterday, the primary hypo, for those who attended, the expectation was for responsive selling into the prior day's high for a test. The expectation is for it to push down to 74.50, so the expectation was for it to bounce, drop, 74.50, bounce, drop, and then aim for the point of control at 76. 70.75. What it did is exactly that. It chopped around. We had an open auction out of range, and we chopped our way into the prior day's range. We attempted to get out, could not, and that put the point of control as a high probability target. A very simple setup there. Needed a lot of patience. Took about an hour for it to play out. And then it pushed through beyond the 70.75. It pushed through by 5 ticks before we got the bounce. Once it exceeded the mid and the prior day's value, oops, that's a terrible line. The prior day's value, then the probability was for it to test the other side of this, the opening swing, and therefore the initial balance. The market pushes to the other side at 82.50, and it has a very quick and very decisive drop. So as we see here, a quick rotation down 7.25 points before a 2-point pullback to continue for the continuation. But we also had I can't draw today. We also had a very strong delta as soon as it. This is kind of the essence of a failed auction. A failed auction generally takes a tick, sometimes two. Here it took 3 ticks, but essentially what happens is the market pushes to a significant area. For us, it's the IB high. You can make any price significant or insignificant. It's about you, your time frame, and what you're using to measure context. And so it checks above, and when it cannot find interest above, then it's free to move to the other side aggressively like it did here. Again, it had a pretty good delta on the way down. Sellers meant business here, and then for the rest of the session, it was stuck in the middle. This is a neutral day. We did break the IB low, and then we broke the IB high. That makes it neutral. And generally on these days, neutral with a test to the middle, we end up closing somewhere around the point of control, somewhere around the middle. What this did, though, is it sold off into the close, showing quite a bit of weakness. You can see the delta here hitting the bid on the close. This basically was setting us up for a selling selling into the overnight. Because why is that? If you recall from prior Trader Bites, by now you should know that the auction is incomplete here. Essentially, the market was still looking to sell off, but it ran out of time. It's an incomplete auction, so it carries over into the overnight session. Let's look at the overnight session. So here we are reopening. It did not continue immediately because there's really no reason. Then Asia opens. Asia has some pretty decent news, employment news. It pulls back to the point of control we just created yesterday, chops around it. Then we get the European Open, the bad news out of Siemens, the bad news out of industrial production. We get a quick pop, and then the market just sells off and is selling off on the comments right now from Bullard. So that's how things are shaping up. We're in a risk-off mood today. Before Bullard came in to talk, the market was right here, right at the Fed low. And it had an incredibly weak low with a point of control on top of it. This is a high probability break lower, and that's basically what it's doing right now. It is pushing into the low and pushing the low. We're back to 2057.50 on the low. So things are changing quite a bit here, and we're starting to look at a move down. Let's look at our value again. Here's the point of control movement chart. Yesterday we had a higher high, higher low with a push higher on the point of control. Point of control still in value. These 3 days are balanced, but it looked like it was starting to recover. Prices are starting to seek higher participants are seeking higher prices and looking at them as value. So today, that changes everything with the market trading down here at 56.50 now. This looks like it may not hold up, and it's still in a corrective mode. This is in, for those Elliott waivers, this is A, B, and potentially C correction here taking place. So we'll see how that pans out today, but things are shaping up as a risk off day for today, and we just need to respond to that. As far as what's expected for today, we're opening again. There's a wild card that just came in here, changes things quite a bit. The market was up here when I last reviewed it before the trader bite, so the expectation was for an easy gap fill and a retest of that 74 quarter area. But now things are changing as the market moves away from where we were in balance here. So if we shift this forward, this profile forward, as we move away from where balance is here, it gets harder and harder. The probability of a return and fill of the gap zone becomes lower and lower. So it puts us in a situation where it's a little tougher to say what the higher probability is. However, we have had 3 days of balance here. We've traded we didn't have that much volume in these 3 days actually. I think we've traded about 1 million, 1.89 million, something like that. It's not that big, but basically that energy is dissipating to the downside. In either case, on the open, I'm looking for a responsive attempt, at least to the bottom of this Fed day and to the low that was put in over the last few days, this 2062, this little dotted line, this 2262 area. I expect a response to that as soon as this backs off. I'm looking for a response back into 2062. If it does not get rejected immediately, then that sets us up for a pullback and a push to 74 quarter, 74 half, and that's the big trade on the upside. If it does not do that, again, there's no way for me to predict what it's going to do on the open with this change that's taking place. If it does not do that, then we're basically aiming at the same stuff that we were aiming at a couple of days ago. First off, the 2050 area is very important here. Sellers are going to want to push and keep pressure on this 2050 area, get us out of this high volume node, and then get us starting on the next high volume node. The better way to see this is in the composite. Sorry, I'm actually not feeling well, so I'm slow. The better way to see this is through the composite. So we've been stuck in this area here. 2050 is a cutoff. If we can get beyond 2050 and into the area below, then that puts the next high volume area into perspective, and we start to look for the 2022 area again. And we're trading these thin bars, these rally bars beyond the 2050 area. So if we're able to keep this down, then the market can participate pretty aggressively on the short side down into this 2021 area, 2021-22 area, this next HVN. However, given that Fed speakers are going to be going on all day, it's really a wild card today. Today's a good day to just, check your emotions, make sure you're not getting sucked into the emotional aspect of what the price action is doing, and to stay focused on your task, which is to find a bias, look for the data, look for the formations data, whatever it is, indicators that you use to determine what the market condition is, and then to just trade that. But right now it's shaping up so that we have a continuation move down, which is corrective on the bigger move up. So this looks like it's well on its way to selling off risk is off the table today. So that's basically it. I want to do a quick check on crude oil. Crude is actually within spitting distance to that target. Actually, crude has taken out that low that we talked about. So I posted this a long time ago, maybe was it a week or two ago, that this is likely to push through, take out this low. And if we zoom out a bit, this impulsive move here is still, to me, still unfinished. This is just a pullback consolidation, and the expectation is for it to retest, just like I said yesterday, retest this 38.54 area unless there is intervention. As prices go down, this is the problem with being short, swing short in this market. As prices go down, you are essentially betting against OPEC, central banks, treasuries, all kinds of things. The participants in the market do not like to see value disappear. The beings in power don't like to see value disappear. But what this is a classic impulsive and continuation, and it has already done its job. Again, it was up in the upper 40s when we talked about this, and here it is. It's completing its move down. Crude oil has been a really interesting trade, going parabolic here this morning. Again, on the this is hitting the market all across. So anyway, my time is up. I'll leave you with that. I did have a chart I wanted to go over with you as far as the internals. I won't spend very much time on this. This is a chart of the percent movement since that low on the 24th. This is looking at the percent movement. Everything starts at 0 on the open, and then the first data point is the close of that day. So you can see some of these days right here look like they missed the 0 market. The market started that morning at 0, and this is where it closed. And what this is tracking is it's tracking what the SPX has done. So the SPX is higher than where we were, as you already know. It's higher than where we were on the sell-off day on August 24th. So I'm just looking for the last swing low, and I'm looking for what is driving, how is the overall health of the important sectors underneath it. So you can see crude oil here is back to where it was almost. It's approaching where it was on the 24th. But what's important to see here is the key underlying sectors. These dashed lines, the 5 dashed lines here, there's an orange one that's hidden in here. These 5 dashed lines represent about 75% of the S&P 500 in terms of sectors. They're the technology, consumer discretionary, financial sector, industrial, and healthcare. And you could see that the movement up had some really strong participation across the board, with technology leading the pack. We already saw the NQ make new all-time highs. And this shows that the technology sector has been the strongest off of that August 24th low. Healthcare has been a laggard. Healthcare has not fully recovered yet. And then when we look at the indices all moving in conjunction, the euro is 5% weaker, the Japanese yen is flat, and the dollar is 3.67% stronger. The euro looks like the participants in the euro are anticipating ECB intervention coming in with the issue of inflation not picking up, so the euro is being depreciated. There are your treasuries. The treasuries took a big dive right here on the non-farm payroll release and have not recovered. But this gives us a general idea of where the money's going, risk on, risk off, and it's an important chart for me to track. It's a cash-based chart generally, except for the treasuries and so on. Anyway, I'll leave you with that. Good luck today, and I'll catch you tomorrow. Take care.